Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Tuesday edition for our shortened week. Hope you did something fun for Juneteenth yesterday. And no, skilled stocksman, it's not a third Independence Day for you. Polish Independence Day, I believe, is 11/11. There you go. November 11th would be the Polish Independence Day. Anyway, hope you all had a great weekend, did something fun. Today was kind of an interesting day. I was, as you know, had my silver taken away from me on my Friday options, which was fine. Had plenty of gains on that one, so I was happy with that. And then today we saw some nice drops in our market overall. And I'll post the article that I wrote for barchart.com. I posted it last night at like midnight. I meant to post it this morning at 6 o'clock in the morning, but somehow I messed up on that. But I'll give you the link here in just a second, which talked about the pullback that I expect to have coming here either this week or in the next couple of weeks based off what's gone on in our market. So I kind of wanted to come up with some visual for today's show, and I thought this would be a good one. Waiting on Jerome Powell. So at a high level, let's run through some of the things that happened today just so we can kind of understand where we sit at this present moment. So you guys know tomorrow morning, Jerome Powell will be giving a presentation in front of the Senate subcommittee on finance and banking. I forget the exact title of it. But the important part there is that Jerome Powell will be speaking. And given the news over the weekend, or at least over our little break here, that China is now dropping its rates, right? U.S. paused their rates. You had other countries that are still raising, but China just dropped theirs by, I think it was only 10 basis points, so not a lot, but it's a clear sign that China is realizing that the rate hikes and their economy is starting to slow down. The numbers I saw showed imports and exports declining in China, which of course doesn't bode well for China, which means there might be a bit of a contagion that comes out of that, because if we're not buying Chinese goods and services, then that means we're not selling those Chinese goods and services here in the U.S., which means less consumption, which means things slowing down. So the domino effect seems to have started here with China's action, and I think that caused a bit of the uncertainty today. So I'm going to start things off right there by going from bottom to top of our 10 and seeing what we've got cooking. Good morning, JR. Joe, Daryl, we've got skills document Joachim, second time today for Joachim. Options merchant Ricardo and Les. Good to see you guys. Here is our top 7, and I'll start things off with the 10-year. In part of the article I wrote for Barchart yesterday, it was looking at the 10-year having a significant impact on things like housing, which is roughly 15% of GDP. And if that continues, GDP is going to suffer, and therefore our economy will start to languish even more. Well, you see this big red candle here today. The numbers just rolled over as we start the show, but on the day, you had the 10-year was down about 2.53% on the day. So a pretty hefty decline, at least in the yield on that 10-year, which of course would be good for the housing market, right? The lower this 10-year gets, the easier it's going to be and more accessible real estate will be. However, we've seen some pretty good fluctuations for the better part of a year right now. If I go back into, let's call it September of 2022, you notice that we've kind of been stuck right above this 3.3%, and we haven't been able to break that 4.35. So a 1% range for the better part of a year, not bad. Don't know which way it's going to go. I'm more of a trend follower, so just kind of keeping an eye on this one. Even though we had this pullback today, it still feels to me like it's building pressure to the upside. And the reason for that, again, is it's making higher lows and the same highs. So it's kind of compressing a little bit. I guess I could draw a trend line on here, a loose trend line through the bodies, so you guys can kind of see, well, let's torture this one, put it right where we think it fits best. All right, that'll probably, right about there, looks like, if we go through the tails and most of the real bodies, there's your upward trend line. So looking pretty good to the upside here, even though we had a pretty big pullback today. That was your 8th place finisher. Now, I actually had some orders on XLE today. XLE got absolutely crushed, so I have orders on XLE and a few other ETFs, including silver, that did not get filled today, unfortunately. So I'll have to wait to replenish my portfolio positions, and I'll let you know what those are when it happens. Here's your crude oil on the day. Even though it shows you down 1.47%, it really isn't that noteworthy, especially with the moves we've had over the past couple of months. Basically inside the range from Friday's trading activity on the 16th. So nothing crazy here from crude oil or in the markets overall, except for Bitcoin, which I'll look at in a second. Here's your gold chart on the day. Now, we've talked about this blue line being a supply zone and overhead supply. Now, all of a sudden, I need to start looking at this blue line here at 1936 as a potential floor for gold. If gold gets down below that 1936 and actually closes below it, then I think you'll probably see it drop down to this yellow box, which is a bit lower, another $20+ lower. So not feeling that optimistic on gold right now. It just can't seem to make a new high. Just kind of getting weaker and weaker and weaker. All right, up to our indexes, our top 5. S&P 500 down 0.05% today. You've had 2 trading sessions in a row of a pullback here. You had a shooting star on Friday's session. So all in all, looking kind of bull flaggy. Are you talking on gold bull flag? No, definitely not bull flag. Not on gold. Let me go back to which one might you be bull flaggy on. Nah, not on gold. This it's gone on too long. I think if you're referencing the move up that started on March 8th and went all the way up to maybe this peak up here, not only has it gone on too long, the part after it's peaked has just been drifting lower and lower. So I would say no to a bullish flag. But again, beauty is in the eye of the beholder. All right, let's go back up this list. So we're on the S&P 500, which was down 0.51%, stopping at that overhead supply level, which I outlined in that article for barchart.com, as well as on this show on Friday. Russell 2000, same number, 0.51% slide for the Russell, although its picture looks a little better. It's already hit that overhead supply level, starting to react, and I would kind of missed anticipated getting back down here to that $1,800 if we do break our closest demand zone, right? Closest demand zone being about 1855. So 1855 and then 1800, but let's worry about that 1855 level for now. We'll see if it stays within that yellow confined space that we have drawn in your chart. Podium time, NASDAQ 100. A little bummed on this one. I actually was kind of hoping we'd see a bigger sell-off here. I'm going to break this into a 5 minutes so you can see the open. I was pretty excited at the open because I saw this really nice slide. It was looking real negative, and then, as the NASDAQ has been doing, ripped to the upside, looking pretty good in the first half of the day, and then just traversing sideways the second half. All in all, down just 0.14%, so no real damage, at least nothing major for the NASDAQ. And it looks like we're outside that yellow box, but if I go back to the QQQs where I was basing my trades off of, I don't know why I took my yellow box away. Kind of strange. It's like I got a different markings here. So let me add in the yellow box here because it should be on this screen right here. Let's go to that point, and then we'll drag it over. All right, so I'm looking at this as being kind of my area of supply, which is where I'm. Oh, this is a tough one. There you go. Okay, so all the way up to that little red line that we see. There you go. That's the supplies that I'm looking at with triple Qs, which peak out at right around 373. That was my stop loss that I mentioned on Friday, which I closed out prematurely, which, of course, in hindsight, I wish I didn't. I would have done okay, but it is what it is. I got to go by my rules. So we've adhered to that overhead supply, and now we'll see if we can get some follow through to the downside. There aren't any, at least, great demand zones that I see. Maybe something around 350. Next stop might be around 331 if we start to see some downside movement here and buy that pullback on the NASDAQ 100. And let's see, dollar index. You had a lot of indecision today on the dollar index, which I think created havoc for most of the markets. You can see today's activity is really a spinning top. It's got a long bottom tail, top tail, and really closed pretty much unchanged on the day. It was up 0.06% for the dollar index, which doesn't help us, give us any indication of direction where it may be headed. And then, nudge that 2019 60s. Oh, okay. And then here's the story of the day is Bitcoin. In spite of all the adversity, in spite of all the lawsuits, in spite of all the litigation from Jerome Powell and the SEC and shutting down Silvergate Bank and the on-ramps and the off-ramps to crypto, over the past 3 trading sessions, crypto's done great. I'm up 7.2% today, 28,350. Momentum ripping. And I think a lot of this, actually, let me ask you guys, why do you think that there is this surge right now in Bitcoin? Any guesses as to why that is? And I will say, in my mind, if it does go the way that I think it's going to go, it should be a clear example of cronyism, of preferential treatment, discrimination, right? There's some factors here that I hope get raised in a court of law and ultimately some lawsuits settled on this one. But why do you think that Bitcoin had such a huge rally today? Well, while I wait for you guys to type that one in, bank applications for Bitcoin, you mean BlackRock's. So you put bank applications, not bank applications, BlackRock. There's been, 15, 20 different companies who've applied for a spot Bitcoin ETF. So you had Grayscale has been one that they already have a Bitcoin trust fund. All they want to do is just convert that into an ETF. But the SEC, the Society of Enigmatic Criminals, I got to come up with a nice acronym for the SEC. The Society for Enigmatic Criminals. I like that one. Now it'll be something more politically correct, but they have turned down everybody's application. Everyone. You know, and you're talking big firms. Fidelity was on that list. Grayscale was on that list. And I can't think off the top of my head, but there were a lot of big names. No. Now, all of a sudden, BlackRock enters the fray. And, of course, BlackRock controls everybody. You want to talk about corruption and manipulation. Goldman Sachs used to be that kingpin of the financial markets. We called them government Sachs for the longest time. That's now shifted. BlackRock has taken over that role of kind of the Darth Vader of the financial world. And they're probably going to get approved. I think BlackRock is going to get approved on their Bitcoin ETF, a spot one, which will be the first of its kind in the United States. This already exists in other countries, which is kind of a travesty that makes us look stupid and, a chaser, keep up with the Joneses type of thing. We should have had this Bitcoin ETF a long time ago. There are also some Bitcoin futures ETFs, which I think will lose a ton of money that's in them right now. I think the money will flow out of those Bitcoin ETFs and go straight into the BlackRock spot ETF if it happens. Now, if it does happen, I'm hoping that we get a lot of public outrage as to why BlackRock? Why wasn't it Grayscale that's already had one for years and you won't let them convert, but you'll let BlackRock do it? Is that because they're influencing and swaying Gary Gensler? Is that why BlackRock or the SEC is going after the exchanges? Because maybe BlackRock will probably buy an exchange and do their own. The conspiracy theorist pessimism in me says that this is all being controlled by the invisible hand of corporations and power that be to take advantage of crypto's popularity, excitement, and opportunity, but keep it in the hands of somebody like BlackRock. So let me, 1 second. Go over here and we'll bring up BlackRock, BLK. Not the best day out there for BlackRock, but the news actually came out on Friday, so that's we have a couple days back we had that news, but a little bit of drop today down to 690. Okay, let me anyway, that was the crypto side of things. That was Bitcoin. Of course, there's a lot of other cryptocurrencies that have had a nice run in the last 24 hours. I will show you just the list of gainers so you can kind of see those. Not worried about OPU. You've got Dash, which has been one that's under a lot of scrutiny. I'm looking at some that I own, like Avalanche, LivePeer, Bitcoin. I mean, these are a lot of pretty big names out there moving to the upside, and that could continue. But typically we get some laggards in there as well. I always like looking at this list, and hopefully I can find, there's one in particular, Hex token, which is an absolute Ponzi level scam. Unfortunately, that one actually looked like it did pretty good today. Where's Hex? Hex. No Hex? Wow. All right, maybe I got delisted. I don't see my Hex on here. Anyway, all right, there is Hex, up 7%. Ugh, can't stand Hex. All right, let me go into a couple other questions, just the ones that came in today. Make sure I get to those before we move on. Can you cover NGL stock? Nancy Pelosi's husband and Mark Green just loaded up on shares. Could be a good one over the next few months. Okay, good question, Angel. One thing that you got to pay attention to is what's the time frame for Nancy Pelosi and her husband to disclose that information? Quite often, you get that information late. So, for example, if we take someone like Warren Buffett, well, Warren Buffett runs Berkshire Hathaway, so that's going to be disclosed information. So, if you have an announcement by Warren Buffett that, we're buying XYZ, remember that they only have to do that once a quarter. So he may have bought that 3 months ago, right? So we may be way late to the party on it, and I believe that that's the same for politicians. They don't have to disclose immediately what they have bought or sold. There is a time window where they can make those transactions and then let us know what they did after the fact. So one thing would be great is if at some point we had a transparent blockchain type system that only transactions by politicians would be used on this blockchain. You could see what they were doing. I mean, that would be fair to us as Americans to know what they're doing. Then it would be fully transparent. So I don't trust that they just bought it. You said here, they just loaded up. I don't know if I could say that they just loaded up. I would say they already have if they did. And as you can see here, this security's gone from 260 up to 420. Convenient. And that's actually just the last month and a half. If you go back to the beginning of the year, this thing was at $1. So I would contend that they've already bought in a while back, and you might be the one that's left holding the bag right now on this one. So I personally, I wouldn't touch it. I don't know what NGL Energy Partners does, but it's had a monstrous run up. So just not type of thing that I look to trade, not to discourage anybody from it. But when I have penny stocks, which are securities that are under $5, penny stocks to me are penny stocks for a reason. They're generally gambles, so I just kind of leave that alone. And other than that, I'm not big on the energy space. I'm not my area of expertise. Thomasina says, is bar charts the best venue to find out how politicians trade, or is there something better need for a school assignment? I don't know, Thomasina. I might see if I can find some for you. I used to go out and it used to be called a 144 filing. So there's documents they have to file with the SEC if they get over a certain percentage or holdings. I don't know what politicians have to do. So if you're an insider and you're a stakeholder in the company, you have to. It's I think S4 document or 4S documents, something. I think it's a document like that, or 144 filing. So you can find out what the SEC process is for them to sell. I don't know what politicians use. Whether that's I don't know if they're in the same system. Because at this point, it's legal for them to do insider trading and trade against knowledge that they have that you and I don't have access to, which should be criminal for them. So I would assume that their system is a bit more lenient, right, with regards to how long they have to report or how they have to report. But I'm not sure on that one. I'll have to do a little bit of research. Do I have a timeline on the BlackRock? No, I don't. I didn't see any timelines yet. There is, I'm sure, a timeline that the SEC has to give BlackRock a response, but I don't know off the top of my head what that would be. I can find that one out for you. But I think that will be an interesting one. If it gets approved, and let's just forget about BlackRock. Let's go to any company gets approved for a spot Bitcoin ETF. Expect Bitcoin to surge. So there's a big catalyst right there. As soon as that happens, you're going to see a big pop in the price of Bitcoin, a significant jump. You could talking 30-40% pop in Bitcoin in a very short period of time, especially once it gets listed on the exchanges and we see what the demand actually is for it. Because how many of you have thought about buying Bitcoin but are just like, oh, I don't want to deal with an exchange and the wallets and I don't want to deal with all of this stuff. That's kind of a turnoff. But if you could just buy a Bitcoin ETF that actually held physical Bitcoin, I think some of you might feel better about that because it's insured, right? It's going to be listed on the exchange, therefore it's going to have SIPC insurance. I think a lot of you would be more comfortable owning the Bitcoin ETF than actually buying physical Bitcoin. Like I would prefer physical Bitcoin, but for some people it'll make it much easier to get into the arena. Rob L says, I don't know if you've already talked about this. My question is, do you see that the price was knocked down right before the markets open? Where do you think silver price heads in the short term? Well, I'm biased. I'm long-term bullish on silver. So in the short term, if we go to like SLV, I still am of the opinion that it's in an uptrend. And I'm only looking at this data here, really going back in the middle of last year. And the reason I say that is you've got higher highs, higher lows. I was anticipating it stopping at this yellow bar or box on the way down. So I thought we would see something like this. I thought it would stop there. It bounced for 2 days. And then all of a sudden you saw it continue back down. So now the real question for me on this one, as somebody who has been pretty heavy in silver, is where's that line in the sand where I say, all right, I'm not gonna take it any further. Well, I'll take this red line from up here and move it down. That low that we established back on the 25th of May, that's a pretty important point, at least from a technical perspective. I had anticipated this thing having a pullback and, retest. Everything's have a pullback. That's kind of where I think the markets are right now, is we're ready for a pullback. Well, if we look at the first real big rally out, which happened back in October of last year, to the peak here, right there, our retracement on silver, let's see if I can get it there, was actually pretty deep and went almost 78%, which is, I would expect it to stop at about 61.8. If we look at the most recent move in it, it doesn't really matter which point I pick. We'll go there to there. How big of a retracement was that? We're almost a 61.8 retracement. So really these lines don't line up. There's not a lot of confluence where one layer lands on top of another. But I kind of use that as a reference point for me, is to anticipate how deep things will go. If we get down below that 61.8 level, I think we'll probably see much more downside movement. I think we'll stop right around that 2080. I had orders today to sell puts at 20.50. Unfortunately, they didn't take my price. I was not going to pay the market price. So I decided to negotiate a little bit, and unfortunately, I didn't get filled on my silver, which I had a lot of orders for silver puts today, unfortunately. But I'm more bullish on it. I think if you read the article I wrote for Bar Chart, let me bring that up for you guys just so we can have that and I can share it with you and you can read it. Although a lot of it is derived from our discussions here. I do think that the longer term picture for silver is going to be up. Although, markets overall I think are headed for a correction, and that correction I think would drive people into the quote-unquote risk-off assets or commodities, which is going to be silver being one of those, silver and gold. So let me, hold on one sec, takes a second to find my page here on the barchart.com website. We'll go right here. There we go. Here I am. And I'll copy this one over and I will put that into the chat for you. So is it time for a market correction? And it kind of feels like we're going to have it happen this week. Let's go. There we go. Control it. All one price for the silver puts. Yeah, I did all 2050s. Mine got taken away at 22. So I was fine with that. Take it away at 22. If I can buy it back in at 2050, I'm totally happy with that. Not only that, but I'm also going to get paid to sell those 2050 puts. But unfortunately, it didn't hit. So personally, I'm kind of hoping we see another little down day tomorrow. I'd like to see silver drop for another day or two so I can get some nice value on these these puts I'm selling, and then fine. If it goes sideways for the next month, great. Just give me that premium I'm collecting. What did Chris say? I think people would pull out of GBTC and buy BlackRock. Yes. Yeah, and that's, some people are talking about buying GBTC. I would leave GBTC alone. Although I will say, I think that GBTC has a very good legal argument against regulators if BlackRock gets approved. Remember, GBTC is already doing it. The GBTC is a trust, so they physically own Bitcoin in this trust. But it's a closed-end fund, and it's a trust. So there's redemption periods, and really weird the way that they can adjust the holdings of the portfolio. So that's where you get these big premiums or discounts. Remember, this is supposed to be 1/1000th of a Bitcoin. Well, if Bitcoin's trading at $28,000 today, how is GBTC trading at $16? That would make it $16,800. So I would leave GBTC alone because I agree. I think you're going to get mass redemptions for GBTC moving into the spot Bitcoin ETF, and that could cause GBTC to really tank. Would not be a good thing. So I would certainly shy away from that. All right, I posted my link to the article in the chat. Feel free to read that one. You can send me comments and questions on it. You can also share it with other people if you want. Help me out a little bit. Okay, I think I got most of that there. There's a website that I subscribed to for a little while that aggregated what politicians try to let me check. Yeah, and Tom, when you look at that, let us know, because I'm sure they have to disclose what the latency is on it. It's not real time, right? There is no way that Nancy Pelosi makes a trade today and it's reported on those sites. It's just not possible. And depending on the site, it's going to be a different delay. I believe that they have to file some document that says, I'm buying this. I believe that to be the case, but I don't know, unfortunately. Kind of tying into that, that's what was confusing me about GBTC. Yeah, it's very confusing. And it has to do with there's a fixed number of Bitcoin in that trust. So as more people demand to buy that trust, the value of that portfolio is going to shoot up even more. But if more people redeem it and are trying to unload it, then that price is going to drop much faster than a normal security would. The Congress trading site was about 30 days. There you go. So 30 days late. I mean, that may not seem like a lot, but as many of you have experienced, 30 days could mean eternity, especially, if you're in something that's going the wrong way. This kind of ties into Thomasina's question from just a few minutes ago, which was about finding the information for insiders. Daniel asked me, how do you find your trades? What scans do you use? What website? I don't use any websites for my trading at all. I do it for research and kind of informative stuff. For most of you, I'm a technical trader, right? So I'm looking at price levels, I'm looking at trends, I'm looking at patterns, I'm looking at candlesticks, I'm looking at formations. But Daniel, I would say I don't really have a scan that I would use. What I do look for is I need it to fall within a couple parameters. So for number one, right away I rule out things that I have historically performed poorly in. And I think you should all do that. You may not even have a clue what you're performing poorly in. But if you do the research and you just bust out an Excel spreadsheet and keep track of your trades, you'll find a pattern that says, wow, I'm really trading this segment or this market or this security poorly. How do you know? Because you're losing money on it, right? That's the ultimate one. And then you'll also find other ones that you're making money with. And it may not even occur to you, but until you look at the numbers, then you'll find out. So I have 3 things really. I can't trade Apple. And that rule was put in place in like 99 or 2000 for me. So I won't trade Apple ever again, and that's a tough one because it's biggest company in the world. It's kind of hard not to trade that one. I won't trade Cisco again because of the losses I sustained on Cisco, and then I don't trade biotechs or pharmaceuticals. The whole drug industry, I could care less. I might day trade them, but I'll never hold those things overnight. Crazy, no way, absolutely not. Now that's the high level stuff. What I also do. Yep, exactly, GD. I was going to head right there. GD says, tell me about FinViz. Now, there are several sites there, but I'll go out here to FinViz, which is a great resource for you. By the way, I don't get sponsored paid by anybody, so just so you know, I'm not promoting anything here. I wouldn't mind getting promoted. It'd be great if I get some little extra couple bucks to do the show. Here's FinViz, which has changed their color scheme. Oh, they have a button up here. I prefer it white. Sorry. If you guys prefer white, I can go white. If you want it black, I can do black. Whatever, I don't really care. If you go up here to the screener, it's kind of nice. So I can go through here and say any exchange, market capitalization, price target. You can all sorts of parameters you can fill out. So I'll go fundamentals. Oh, here, price. So I don't trade anything under 15 bucks. Just a rule I've had for a long time. So I take that out. I also want to see average volume. I like to see something that trades over 1.5 million shares. So let's go, I'll just do over, let's say 2 million, right? Weed out a whole bunch of stuff. So now I've taken all the stocks that are traded in the US. I've taken things 15 bucks and over, and it has an average volume of 2 million. Now, why is that? Number one, I believe that things under 15 bucks, you're starting to get into penny stock category, and there's a reason. If they were a legit company, they'd be above that. And I want to make sure that there's enough liquidity to handle my style of trading, which I tend to trade a little more than most. So I whittled down the entire market down to 612 possible securities. Now I don't know if I can remove. If you're in the elite package with FinViz, you can do a lot more than I can here. But that's just some of the different pieces I can do that. And then I can go here to fundamentals. And if I wanted to look for something like specific PE ratios or projected earnings growth, I could make changes there. And then you also have some really cool little technical features where I can say, show me things that are above the 20-period moving average, average true range. So let's do beta, for example. So beta is a measurement of volatility in relationship to the S&P 500. So if I have a beta under 1, that means, let's say it's half. That means it's half as volatile as the S&P. Well, as a shorter term trader, I prefer things to be higher. So let's go over 2, which means twice as volatile as the S&P 500. And now I have 34 different securities that I could look at that are traded on the exchanges. And out of that, there's going to be some biotechs and pharmaceuticals, but that's just one way you can do to find, at least to whittle down the universe into something that fits the basic criteria of what you're looking for. Then I always like to trade things that I'm interested in, but mainly what I would do is I would find a way to export this list. Right, I would take all 34 here. I would export that list. I would put it into a watch list on something like TradingView or TradeStation. And then what I would do is I would just simply add them to it, and I would click through like this. I just go, does this picture look appealing? Does this look like there's a trade opportunity here? No. Does this one? Yes. Right, this is the NASDAQ 100. Looks like it's poised for a pullback, so I might look for shorting opportunities coming down towards the demand zone. Energy, right? Energy was one. XLE was one today. It was down 3%. I was looking at selling the $75 puts, which would put me right down here below these lows. It hasn't been this low since September of last year. Great, right? I'm fine with that. Even though it looks weak, it's a descending triangle. I'll buy right at the bottom of that triangle, and if it gets below it, I'll stop out. So I'm really just quickly looking at patterns, formations, shapes, and saying, are there trading opportunities that fit me? Let's see, what do we got here? Lately, I like to use FinViz to scan for green stocks in a bloodbath market. Yep, it's one way to do it. I do great with the Australian dollar and the S&P. Why I don't know. After all, the chart is a chart is a chart. Why doesn't gold and oil work? And you know what? That's the question you'll never answer. You'll never be able to answer that one, skilled stocksman, and it's puzzled me for years. Why is it that I can find a basket of stocks that I trade very well, whereas all of a sudden a whole bunch of other ones I don't trade well at all? You could torture yourself trying to figure out how to get better with all those other stocks you don't trade well, or you can just forget about them and go, fine. You think of it like your friends in your life. If you look at your personal lives, you probably have some good friends that you just get along with, and there's a rapport there, and for whatever reason, they become really good friends. Whereas you might have some other people you keep around that you're like, why am I keeping this person around? Depressing, he's whatever attitude. Just cut him out. Get him out of your life so you don't have to deal with it anymore. And I think it's the same thing with stocks. I can't tell you why for a period of time in the late 90s. I had a 2-year cycle, and I don't know why it is, but there was 2-year windows of time where I would day trade the same stock every single day. So I traded E-Trade for 2 years, traded Broadcom for 2 years. I traded KLA 10 Core for 2 years, and for some reason, after 2 years, it all changed. I have no idea why that is, and I don't even care to ask a psychologist. I just know that that's my pattern, so I'll rotate and find something new. So yeah, Skilled Stocksman says, I trade great with the Australian dollar and the S&P. Then why do you need anything else, right? So what Skilled Stocksman has done is actually made it very easy on himself, because now he really just focuses on 2 things. And if those setups aren't there, he can take off, go do something else, go golf, whatever. If the setups are there, great. You got less things you need to worry about, less you need to watch. Now, I would think it's probably in your best interest for most people to have more than just 2 things. Therefore, if those 2 don't move, well, you're dead in the water that day. So have a basket, maybe 10 different things. And I would mix it into different asset classes. If you look at our top 8 that we start the day with here, I've got cryptocurrency with Bitcoin. I got energy, I got crude oil, dollar index, so I'm looking at currencies. I've got 3 indexes, S&P, NASDAQ, and Russell. And I also have gold and bonds. Now, I don't trade bonds personally, but you could certainly go out there and trade the bond ETFs and have your liquidity. But this is a fairly diverse group, and I could go much deeper than that. I just kept that at kind of a high level way to start our day for this program. Let's see. Plato says, can you take a look at the lift chart? Feels like a new low could be forming. Let's go to the LYFT. It feels like we are still drifting lower. So the reason I say that is, you notice this lift chart, lower highs, lower lows, right? And you had this one break, which was back in February, where it actually broke the high from November, and it looked like, hey, we're doing good, and all of a sudden, boom, just crushed it. It crushed right back down. We're still making lower lows. Look, each of these subsequent windows between earnings is a lower low. Right, makes a new lower low. Now we've made a new lower low now. It rallied up, but we can't seem to break the high from the previous earnings cycle, which goes back to May 3rd. So we hit that, now we're selling off. My guess is you're going to see this challenge these lows again and keep drifting lower until something changes. And that's just because that's what the trend is. I was having an interesting conversation with a friend over the weekend, and I'll throw this out to you. If you look at Lyft and Uber, right? You have a human driver. You've got somebody who is picking you up and driving you around. Envision a future, and I don't think that this is too far off. I think you're probably maximum 5 years. What'll happen is I will buy the Tesla Supreme or whatever it's called at that moment, and it will be a full self-driving car. So I will use it when I want. And let's say, the end of the day, it's 7 o'clock. I know I'm not going anywhere for the rest of the night. I will hit a button on my remote on my phone. I sit on the couch, crack a beer, put on the 49ers game, and I hit this button, and my car will now go to work. It will join a decentralized network that basically is ride sharing. And anybody can use my car. And my car will go pick them up, fill itself up at the charging points. It does all this stuff while I'm asleep. I have no clue what's even going on. I wake up, come in the morning, and my car is in the driveway because I tell it to be there by a certain time. It's sitting in my driveway, and it says it's earned me, $200 worth of ride fares that night and X amount of electricity, etc. That's the future we're headed in, where you'll own a car and you'll just let it go join the grid and be a rideshare program type of vehicle. So I think Lyft and Uber, while they're great, and I love them, I think that what they've done for society is amazing. they could be struggling in another few years. Now, I would actually assume that Lyft and Uber would buy fleets of those vehicles and have them running 24 hours a day. But anyway, random thought popped in my head, and I thought I would share that one with you, because part of what I think we have to do as long-term investors is look at the big picture and say, what if, right? What's my Star Trek view of the future, and where are those opportunities? Is there something on the horizon? When you look at Waymo and what Google's doing with Waymo, oh yeah, we're going to have full autonomous driving vehicles here, and I can't wait. It'll be awesome. I have the same issue with the euro. Do great. Oil just kills me. Questlock. Then don't trade oil. Leave oil alone. Last year I was trading copper and had a solid continuous play until I mentioned it here and it fell apart. I learned to buzz about my failures. Right on, Dave. I hope you learned that from me. I generally don't like to talk about my winners. I don't. It's not about gloating. It's not about bragging. It's hard to say, because I know many of you, and I was like this when I first started, you have a great trading day and you just want to tell everybody, like, man, I crushed it, I did this, and then just be quiet. Don't even say. When someone asks you how was your trading, the response from me is, oh, it's good. It's all right. Yeah, it's going well. It's simple. That's it. I believe, I'm superstitious. I think the market hears you. So when you say something in particular about your gains, I think the market has a way of listening to you and say, oh, you're bragging about your trades that you did well on? Let me kick your ass up and down the street for the next 3 months. Just the way it always feels for me. That car will come back clean after being designated driver all night. Might have to do a little bit of scrubbing. But, it'll have cameras all through it. So if someone throws up in that car, well, you've got their address, you got their contact, and they'll probably have to pay a deposit for it, right? So it's just the future, Tom. It was just an idea. Yeah, it's not going to be perfect, but I think that pretty soon those that have the money and can afford that type of vehicle will be able to earn money on that vehicle while it's sitting dormant. Pretty cool. I think that's what the future holds. Do you have any type of idea why food companies like Kraft Heinz, Campbell Soup are selling off when I thought they were defense stocks when people must eat at home? I don't. I don't. I don't. CAG has been one that I actually thought we'd be doing good on trend-wise, but it seems like it just really hasn't done much for the last couple of years, right? We've been stuck between 30 and 40 since 2020 started. If I look at this chart on ConAgra Brands, regardless of my thoughts about food, I would say the price chart is telling me that this is not a great play. It feels like it's just, if anything, it's slightly up, but long-term tells me stay away from this one. If you look at Kraft Heinz, oops, I typed in the wrong screen, AHC, a similar picture, right? I mean, this is just flatline. I want something with a trend. If anything, I could buy these lows and sell the highs, but Tom, you might want to look at this one from a Iron Condor perspective. Kraft Heinz, look, it's hit that high of $45, hit a low of 32, and it's just been stuck in that range ever since. It's been there for over 2 years. So I don't know why that would be, why we're having an issue there, Michael. I really don't, fortunately. Oil swings are too big, and trends can feel non-existent unless you zoom out on the weekly time frame. Yeah. All right, let me go to, so Daniel, I don't, again, I'm going back to the long-winded answer to your question, which started all this discussion. I don't run any real particular scans and filters. I like to look through the markets that I know, and I will look for certain patterns, right? So let's say I added this whole list of bank stocks down here when I was looking at trading XLF. I would just simply click through, and I look for either a chart pattern or candlestick formations, and I don't spend a lot of time. I mean, literally, like 1 second is all I really need, but I've looked at these charts for so long that, my mind is made up very quickly. And if I miss opportunities, that's fine. I'm not too concerned about that. I don't, this is all in the banking ETF or banking stocks. I don't see anything here that looks great. Actually, BRO. So Brown and Brown, right? This looks like actually a pretty decent shorting opportunity. Why? Well, you've had a double top, and then today you have a shooting star. Is there enough volume? I traded 1.9 million today. Trades about $1 million a day. It's fairly light volume, but $66. I don't have to go too big. This is one I would just simply make a note, and if I got up early that morning, I would look to potentially trade BRO to the short side. But it's real quick. It's just flip through, take a peek at those charts. Does it look appealing? If not, I move right on. I don't try to force something to look like a good trade, and that's something that I made a mistake with early on, is I would spend a lot of time arguing why I should buy a certain stock, why I should buy a specific chart pattern. Oh, wow. JP Morgan looking good. Anyway, I will stop there. Short American Express. With American Express, would I have liked to have shorted? Well, certainly now that it's going down, in hindsight, we could say let's short it, right? But it never really came into overhead supply, right? I didn't see any real strong entry into supply, so that takes away a couple of points from me wanting to short it. If I look at the longer term picture, I could make that same argument that it's really spent the last year and a half to 2 years just in a wide range, certainly for American Express, but nothing that exciting. I don't know if I would short American Express. I think you're probably going to look at American Express fall a little bit more, but you're almost to that next area of demand, which is sitting right at 168 and is currently trading at 169.38. So we're pretty darn close to the demand level. I wouldn't short American Express right now. Kraft Heinz has a very small premium, so not much on the sideways trade. Oh well, just brought it up. Just thought you might like that one. With the self-driving cars, I think it will have an effect on hotels and short-haul airline trips. No need to stop, sleep in your car as it drives. No need to endure. Yep. Oh man, I'm telling you, I'm from Northern California, and the thought of, or even Vegas, like I'm going to Vegas in August for that trade show on a Wednesday. It would be awesome for me just to get in my car and either research, work on my presentation, trade, or just go to sleep and sleep for 4 hours. Even if my trip took an extra hour, like a 5-hour trip for the car to do everything as opposed to me driving it in 4, great, I'm in, man. I am absolutely in. Bring it on. What does Skilled say there? I guess you just have to do like Merlin says. Why is a very good question. The only thing I can say is I am doing is trading the stuff and it's not working for simulation is one that I disagree with a lot of other instructors on. Other instructors will say go into simulation and trade in simulation for a long time to get really comfortable. I say hogwash. I say you get in there and you do it. You buy something, even if it's one share of something. Right? You got to start so you get that emotion. You get that intensity and feeling of real money on the line. Just don't do it with a lot. Do it something very, very simple. There's some stuff out there that's rather cheap. So just buy a few shares of it. But you're still going to operate off the same basic strategy. Supply, demand, whatever technical analysis tools you're using, volume indicators, whatever that plan is, have a plan in place and try it. If you're in simulator, guys, simulator doesn't feel you like normal. Your orders don't go through simulator like they do in real life. You'll send an order in a simulator, it fills you at any price you want. In real life, man, sometimes you get a squabble or do a market order. I definitely think you should go out there and real trade. And then the other part is just keep track of what you're doing. If you trade something and you do well with it, keep trying to make it better. I won't be surprised if Amazon is at all-time highs, and so are the markets. Yeah, Amazon's... Somebody a few months back was like trying to yell at me that Amazon was garbage and it's going to come crashing down. It's like, explain how. How are you going to have a company that does all that Amazon does crash and burn and disappear? Whether it's the retail distribution side, whether it's Amazon Web Services, just those two things alone to keep that company in business for a long, long time. So I think it'll be all-time highs, and personally, I think it'll be a company that passes Apple at some point. But you definitely need a loss limit per week. Oh, yes. And again, Dave, that goes to a plan, right? So if anybody's starting out, you should have a per day stop loss, a per week stop loss, and just so you don't blow your account, you should always have a stop loss in place on the trades that you make, just so you understand that it's not going to cost you that much money and you can kind of define it. Yeah, absolutely. Absolutely. Trade live, have a plan in place, use stop losses, and don't get concerned if you lose a little bit on some of your trades. You'll lose here, you'll lose there. Just don't lose big. That's a big thing. Let's see. How much time I got? I'm going to wrap up. I got to start doing shorter shows. I've been going way too long. Tomorrow when we come back, I got some question from Scott about space. So Virgin is going to start their, as you guys mentioned on Friday's show, their first commercial flight. It's supposed to happen, I think, next Tuesday, if I'm not mistaken. And there's a lot of anticipation about that. So we'll look at that on tomorrow's show. Tomorrow's Wednesday. Remember, you've got Jerome Powell speaking, so I don't have the Forex calendar up here right now, but I will bring it up right now. On Thursday, I'm going to have John Rowland back on the program. I will be joining barchart.com to do a webinar next I believe next Wednesday, the 28th. That's our tentative time, but we'll know more and confirm 100% on the Thursday show with John Rowland. But here is your calendar for mañana. There we go. So there's your Wednesday activity. That's the big piece right there. Jerome Powell will be testifying. That's under oath. Gotta love that. 7 a.m. Pacific time. So that's 30 minutes into the trading session here in California. If you click on that here, you'll also see what it's all about. Is testifying the semi-annual monetary policy report before the House Financial Services Committee. Again, this is going to be a pre-written speech to begin with. But after that, it's random questions that sometimes they come out of nowhere. I don't know if you guys saw the testimony that a lot of the crypto guys were doing. This was a week or two ago. But Senator Green from Texas, I was squirming in my seat at the uncomfortableness and absurdity of his question. It was like absolutely so bad. I actually tweeted out to him, I'm like, you're embarrassing yourself right now. You're absolutely embarrassing yourself. You're wasting valuable time with your line of questioning. It was absolutely just horrible. For those that might not know, they were talking about the SEC registration process. They're talking about how easy is it for crypto companies to get their securities listed and things like that. And Green gets up there and he just goes, I want to talk, well, I can't mimic his voice, but I'd like to talk about inclusion. Where are would you agree that we need more diversity? And, it was a bunch of men up on the panel. Different ages, but definitely different men. Mostly Caucasian, although I think there was a Middle Eastern guy. I think there was one guy who's actually Latino. And he says, where are the women at? Where are the black people at? And he's like, that's not the point. The point is we're talking about technological innovation. And he kept beating up. He's like, raise your hand if you think there should be more women sitting here. It's like, come on, man. We all know, yes, that should be the case. But the bigger issue is let's get securitization of cryptocurrencies. Let's get digital assets framework done. And then let's have the conversation of, anyway, sorry, it was crazy. Maybe he was, Margaret. It was just really embarrassing. I was like, and he kept going over. It was 5 minutes of the exact same thing, slow talking, saying, does your daughter behind you think that she should be up there? It's like, yeah. The guy goes, yeah, obviously. I mean, come on. Jeez, move on. Anyway, I won't believe it. So you have tomorrow, the Powell thing is pretty much it. There is, as you see here on the screen, no other real economic data to speak of. If you're trading for Canada, Canadian dollar, you have the retail sales numbers. And that's about it for your Wednesday. Now, because you keep mentioning it, Skilled Stocksman, he's been doing really well in that Australian dollar. Let's go take a peek at that Aussie dollar. Heck of a move down today. It's a tough one because it was traversing sideways for so long, and all of a sudden it broke out, right? You had that break down, and all of a sudden you rip back up. If you're asking me which way it's going, heck if I know. I really don't know which way this thing's going to go. But glad you got some nice swings on this one. I'm assuming, Skilled Stocksman, that you're a shorter term swing trader, like a day trader or swing trader, because there are some great moves in currencies that happen on the short term basis. Here's your 5 minute time frame, and that once you bottomed out today, there's two beautiful trends. Great downtrend, then all of a sudden followed by a nice uptrend. So nice. I'll try to incorporate more of the Forex stuff in here. The only Forex I do lately has been the euro dollar and a couple yen, but just on futures. That's pretty much it. Okay, I'm going to wrap things up for today. Hope you guys enjoyed today's show. Happy Tuesday. Tomorrow, again, I have no guests, but I will be going through some listener questions. I've got a couple. Scott has one I need to get to. Lee asked this question, which I have to answer today because it's only relevant for today. Does the shooting star like the one on Open look like a short trade to you? So let's go to OPEN, and then I'll kill this program. Yes, it looks like an amazing shooting star. I love it. However, you're talking about a $3 stock. I don't care. I'm not shorting a $3 stock. There's just no way I would short a $3 stock. It just doesn't make sense to me. But if this was a stock that was $30, I would say, yeah, I would line this up to go short for tomorrow. But also notice the volume. Volume is higher, but on a candle that's that big, I would expect volume to be much, much higher than that to show real emotion, because that candle right there is one of the biggest on the screen. A lot of emotion should have been conveyed there. So, meh. Nice shooting star. Thanks for the call out, because I don't usually trade Open Door Technologies, or I've never traded it. Didn't even know what it is. But it's still a penny stock in my opinion, so I would leave it alone. All right, that's going to do it, guys. I hope you enjoyed today's show. Again, if you have comments, questions, feedback, things you want covered tomorrow, let me know. I have no guests, so email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos. I'll incorporate those into the slides, and we will get that started with tomorrow's show. Thanks, everybody. Enjoy Powell. Be careful on that Open. Going to be a wild one for tomorrow. Take care.